Hey traders, welcome back to another Sunday video. And last week was a very volatile week. We saw some huge moves in crypto, in silver, we saw some huge moves in gold, in stocks, and all the stuff. We saw some huge moves. So we saw some dumps, and then we saw some bumps. Again, in all the markets, we saw some dumps and bumps. Crypto, whether it's Bitcoin, whether it's stocks, whether it's gold, whether it's currencies. So there was some uncertainty going on, and there were a lot of things which happened in the last week. So we will try to cover them all in this video, and we will also try to prepare ourselves for the upcoming week. So before we actually start the video, make sure you hit the like and the subscribe button, as this motivates me to continue what I'm doing, and it helps me with the algorithm too. So without any further ado, let's start the video. So talking about all of you, all of your most favorite thing, which is gold. So first we will talk about gold. We had the Federal Reserve meeting, which caused the gold to dump. Okay, so the Federal Reserve meeting, the Fed came out and they said that inflation is still a problem and the economy is standing strong. The inflation is still rising or maybe stubborn or somewhat you can say sticky, and the labor market is also quite strong enough. So they gave some hints that they may not do a rate cut in January, and also they said they will do only a 50-point rate cut going into the 2025, and previously they said that they are going to do 100 point of rate cuts. So this is a very negative thing for gold, because the lesser the rate cuts, the more negative it is for gold. So that's why we saw some dump in gold, and at the same time we also saw some dumps in the biggest stocks like the S&P 500. So you can see the S&P 500 also saw a dump, and on some other stocks we also saw some big dumps on the Federal Reserve meeting. But on Friday, we saw some reversals of these moves on gold or on Bitcoin or on like stocks, on everything. So you can see this was the meeting, and then after that on Friday we saw some reversal of the move. Now the point is why we saw the reversal. So for this we have to go to the forex factory first, and we will try to understand. So after the meeting was there, after the meeting we had a PC index. So we have the PC data, and PC data came out to be negative. Now what this means? The main concern, the main point, the main agenda of the Federal Reserve meeting was that the inflation is still rising. So that's why it caused a fear in the markets that there may be lesser rate cuts, which caused gold or other stocks or go down and dollar to go up. But on Friday we got the inflation data, and which actually showed that the inflation maybe is not rising as strongly as they said or as they expected. So we got the inflation rate which was below the expectations, and it took, because of this, all the fear which was present in the markets due to the meeting of the Fed, it went away. That's why we saw some reversals of the moves on gold. Gold started to fly, or the stock starting to fly, or the dollar starting to dump. Some moves like this we saw on Friday. So this was the fundamental reason behind it. Now in the upcoming week, what we can get or what we can see. So first of all, talking about, I would like to talk about Bitcoin, because in the current market environment, Bitcoin looks quite interesting to me. So also took a trade on Bitcoin, which is not going quite well for now, but Bitcoin still looks interesting to me as long as it's holding this support area or this support area or this support area. I'm interested in Bitcoin. Why? Because Bitcoin is an asset which performs well in environments where there are no uncertainties, where the economy is going well, where the labor market is standing strong, stuff like this. And right now this is the current environment. That's why Bitcoin looks interesting to me. Bitcoin is very much correlated to stocks like the S&P 500 or the NAS 100 or the Dow Jones. So that's why I'm interested in Bitcoin, and as long as it's holding the support area and it tries to fly up, I'm well in this trade, and I will be holding this trade. But if it tries to break out, then I will just book a loss. So it's as simple as that. But if it comes at this spot and shows me some reaction, or comes at this spot and shows me some reaction, and at that time if the fundamentals are also staying the same, the market environment has not shifted, then I will be looking for longs at this area or maybe at this area again, because I am quite interested in Bitcoin. Now if we move to gold, to be very honest, it doesn't seem very much interesting to me, because we are just ranging now for so long, and this is quite a big range. For gold to be bullish, we need to see a breakout of this area. Okay, so we have seen gold rejecting from this area strongly for quite a few times now. And gold bulls, what they need to form some higher highs, and they actually need to break this area. And if they do so, then I may start to look for some buy setups on gold. But as long as there's no technical clarity, I am not interested in gold. Still, let's talk about the fundamentals. So the fundamentals are actually quite mixed for gold. Like the economy still stands strong, the labor market still stands strong, which is quite a negative thing for gold. But the main fear for the gold market was the inflation data and was the rate cuts. So the Fed pointed out that they are going to reduce the pace of the rate cuts, which is a negative thing for gold. But why they were going to do that? They were going to do that because the inflation was it was expected that the inflation is going to rise. But on Friday we saw that the inflation is actually not rising at the pace which they thought it may be rising. That's why gold bulls got active on Friday and we saw some reversal of the move. Now in the next week, if the things stay same, then we may see something like this on gold. Okay, but I'm not very much interested in gold, and neither technically nor fundamentally, because it's just quite a mixed thing. If we see something like this on gold, so I may be interested to buy gold around this area, but as long as we are ranging technically, I'm not interested in gold. I would like to talk about some other place too, which I usually don't in my videos, but I would like to talk about them now, as there are a lot of things happening in the market, and December has just been so amazing from a volatility perspective. Usually Decembers are not this good or not this fast, but this December just hits different. So talking about a thing which is called the VIX, it actually measures the volatility. So if VIX is rising, it means there's some uncertainties going on or stuff like this, which caused risk assets to fall. What are the risk assets? It is like the crypto or the stocks. So it causes the things like this fall. So there was a huge spike in VIX on the FOMC meeting, but after that we saw the VIX to tumble because with the inflation data, with the inflation rate, all the fear went away from the markets. So this gives you quite a good perspective about where the fear and greed is heading in the market. So right now, it seems like that there's not much fear in the markets, which can cause stocks to continue go on the upside. Talking about Bitcoin, I actually have talked about Bitcoin, so let's move to dollar. Dollar is also looking quite strong enough to me. We are continuously making some higher highs on dollar, and we actually tested this support area, or you can say kind of a support area on Friday, and dollar can very well continue on the upside. Maybe not, if not from this area, then from this area, because the question is why. So the reason behind it is dollar is still quite strong, and the Federal Reserve is expected to cut their interest rates at a slower pace than the other banks. Maybe it can be the ECB, the Bank of England, or whatever. Okay, so they are expected to cut at a slower pace, which keeps the dollar strong as compared to the other currencies, maybe the euro or the pound. Okay, so that's why I'm quite interested in dollar, and dollar still looks quite strong to me going into 2025. Let's talk about EURUSD for a little bit, and EURUSD also looks quite interesting to me, and my targets are actually quite big on EURUSD. I think we may be heading for parity. EURUSD can head to these levels in 2025. Right now we are standing at 1.04, but I think we can go to 1.00, which is quite a bit target, but we will see. Right now, I have a short position on the Euro USD, but this is a personal trade. I didn't share this with anyone because I'm just testing my swing trading strategy on it. So Euro looks good to me. On the sell side, why? Again, because the dollar is strong. The Fed is expected to cut at a slower pace than the ECB. That's why Euro USD looks quite interesting to me for me on the sell side. So I have my stop loss trailed above these highs, and this area looks interesting to me to maybe add some sells. So if we come at this area, retest this area, and we show some signs of rejection, then I may add some more sells at this area for some swing or positional positions going into the 2025. The thing is, as long as we are holding this resistance area, I am quite interested in Euro USD, and I think that there's enough room for Euro to continue going down. What I'm looking for right now on Euro USD, I'm looking for it to break below this area, and if you see Euro to break below this area, then I will try to trail my stop loss. And yeah, this is how I will keep things on EURUSD. I'm just trying to diversify, and I'm just looking on more and more pairs, and I'm just trying to diversify myself from trading only gold, because trading gold only can be hard sometimes when it is consolidating just like these days. Talking about the S&P 500, it is another US index which has some 500 big companies in it. So talking about the S&P 500, S&P 500 also looks quite bullish to me. So we are making some higher highs, higher lows, higher highs, higher lows, higher highs, and then a equal low. Okay. So also this move on S&P 500, this move again was caused on the Federal Reserve Day, because uh, the stock markets is also inversely related to the rate cuts. So interest rates. Okay. So the Fed pointed out that there may be lesser rate cuts. That's why the S&P 500 fell hard. But on Friday we got the inflation data which came out lesser than expected, which again uh, rose some hope for maybe more rate cuts, which caused the S&P 500 to fly. So again, the US economy still stands strong, and I think going into the 2025, this bull run on the US stocks can actually very well continue. I'm not in any position on S&P 500, but I'm looking for some positions. I'm looking for the breakout this area, and if I get a breakout of this area, then I will be looking for some bullish positions, or maybe I'm looking for even lower levels. And if I get them, I may look to start to get bullish on S&P 500 and get some positions on it going into 2025. Talking about the Nasdaq is also another index of the US, and it is also in a quite strong bullish trend. So we are making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs, and then higher lows. So the NAS 100 also looks quite interesting to me. It's the same as you can say S&P 500. The fundamentals are same for it. The technicals are quite same for it. So it also looks quite interesting on the bullish side for me going into the 2025, because of the same reasons which I told you about the S&P 500. So I'm looking for some longs on it too, but not at these current levels. I will be waiting for a breakout of this area, or maybe some lower levels, maybe around here, and then I will be looking for some uh, bullish positions on the NAS 100. Now talking about our last pair, which is going to be the Dow Jones, and it is also again a US index which has around 30 companies in it, and it is also the same as of the you can say S&P 500 or the NAS 100 or the yeah, that's it. So it is also again making some higher highs and higher lows, and it again saw a downside movement on FOMC meeting again because of the interest rate thing or the inflation thing, and then we saw some recovery on it again due to the inflation thing. So I'm also interested in it too. I will just uh, add some positions maybe on the Dow Jones or on the S&P 500 or on the NAS 100. It just depends which gives me the best setup. At the current levels, Dow Jones looks quite interesting to me. So if I zoom in, I just need the price to maybe stay at these levels, or maybe retest these levels again, or stay at these levels for some time. And if I get something like this, then I will look to long the Dow Jones also. So this is going to be my trading plan going into the 2025. The next few weeks, in my view, are going to be very less volatile. There's going to be very less volatility because we don't have any major data. Like you can see yourself, we don't have any major data. The major data has ended. There's nothing, only the unemployment claims. We are getting the unemployment claims on the December 26th, and these are also not going to hold enough weight in my opinion, because it's just the day after Christmas. So I don't think so there's going to be something crazy on it. And going into the January, starting January, we again have the unemployment claims, and we have the ISM manufacturing PMI. So these two data will be important, but I would start trading in the second week of January. Maybe I will trade on Friday, depends, but most probably I will start trading in the second week of January actively. For now, I'm just looking for some positions and setting myself up, and I will be dropping some regular analysis going into the end of the 2024 on my Telegram channel. It's totally free, and if you're not in my Telegram channel, I will drop the link in description. You can join from the link given in the description. Best of luck and happy new year in advance to you all, and best of luck for 2025. Make yourself better, keep focusing on the process and be disciplined and be patient with your setups. So that's it. Happy trading. We will meet in the next video, and hopefully you do better than today in 2025. Best of luck.